All right, what's up, guys? I want to make a video on a concept. I'm still not 100% like perfect at it. It's just something I learned, but I want to make a video so it helps me kind of wrap my head around it and understand it, and hopefully it helps open someone else's eyes as well and can make sense in their trading. So what I've been really paying attention to is not really, marking out every area of my chart, and more what's going on with the price action. Where are things being left? And the more and more I kept looking at this, the more I came down to just these three simple questions that really will answer what the intentions are of the smart money, the market makers, liquidity providers, whatever you want to call them, the algorithms. How are they leaving things? How are they approaching price action? And when they do this, when you look for these things through these basically three or four questions I'm going to lay out, it will really give you an understanding of how to position yourself, how to trade the market, where to look for entries. And I guess the easiest way to go through these is really just to go through a chart. So right now I'm just on Ethereum. I'm on a low time frame, a 5 minute. It works on all time frames, but it's more prevalent definitely in lower time frames because you're able to see a little bit more detail within it. But it'll still be prevalent throughout all time frames. So first, you're going to start out when you arrive to a chart is how are the highs and lows being treated. So we can simply just mark this out to kind of give you perspective just by going and marking out a simple range. So now that we took our low and high, you see there's respect off of the equal. You can really start looking for how is price action developing. And when you go to this, you can start marking out where the highs and lows are. So we have this low, high, low, high. You can mark out this low. The next high would be here. And then low to high. Now, I guess a simpler way to mark out structure is to really look for where were the highs and lows in line with each other. So what you're looking out for is we have this low when we first come to this range, and then we have this highest high. And then on the next high that breaks through, this one right here, you want to mark out that lowest point. So now you have sort of this trend. So now you know what's going on with price action. And then before you break this high, you want to take the lowest low before you get to that high. Then you want to take the next low following it, which really could be this one right here, before that high, the high that breaks. And once you start seeing price break below that, I don't know what that's doing, then you could start shifting perspective, maybe seeing that price action is starting to change from the upside to the downside, downside to the upside. So just marking out these areas will give you perspective on market structure, but then it'll also give you perspective on where is the liquidity here. So we have liquidity resting at all these lows, and the funny thing about it is none of these were really swept. So you have all these valid lows that really weren't swept at all going through until we got to this point right here. So when you're looking at price action and you're assuming that market makers want to move to the upside, you would assume that they would want to start grabbing liquidity at these different areas. Grab liquidity in this zone right here. Or when they're over here, grab liquidity right here before starting moving to the upside. And seeing them not do that can start to give you sort of perspective or possible intention of them wanting to sweep these lows later on. So keeping that in mind, you could start going to the next point of where's the liquidity being left. And so it's being left at all these lows, but then you also have liquidity resting at the highs. So we have this high right here, where we definitely have some stop losses resting above it. And most likely it would be a good idea for them to sweep these highs to get their short positions filled or to exit their positions, whatever the case is. So we have the two areas of interest now. So we have this high, this range high, which is also where there's probably some short stop losses, some breakout traders. And then we also have all these lows that are just left untapped. And once you have those two areas in mind, then you can start looking for where is the momentum within the chart. So basically, price action can only really go two ways, which is just up and down. And there's a little bit more to it because it's not simply just, you know, one way and then another way. You have to look at where the momentum is within the chart. So if you have a price action that's moving up very quickly and then down very slowly, you have to assume the upside is institutionally sponsored. You have to assume that they're targeting this end and then letting retail and smaller whales or whatever start building up short and long positions on the way down for that to just be later swept again to the upside. So you have to look and see where's the momentum. Is it on the upside or the downside? And that'll really give you a sense of how the trend is reacting. So in this example right here, we see that there's a very strong reaction to the upside versus a very slow buildup of orders to the downside. So you can assume that this is institutionally sponsored uptrend. You can see slow downtrend right in this area to a very quick uptrend, slow downtrend, quick uptrend. So just knowing that, looking for where the momentum is, will really give you an idea of where they are, what they're backing. Are they backing move to the upside or to the downside? And once you know that, then you can start looking and seeing, okay, so they're clearly favoring upside trading. They swept this liquidity right here. Now the momentum seems to be shifting. We have a very strong reaction to the downside, which we've never really had before here. We've had just slow reactions, just letting orders build up to be taken later on. And once you see that momentum shift pairing with where the liquidity is, that can start to give you a sense of, okay, I know where my targets are. I already see this liquidity was swept on one end, and the momentum has also changed. So that can start giving you a sense of trend possibly reversing. Now, the last thing to keep out for is, has the structure shifted? So, like I went over before, I marked out the highs and lows, the valid highs and lows, which are basically, you could tell these were institutionally sponsored highs and lows. There were strong reactions off of it, and they're also the lowest low before a high was broken or a high before a low was broken. So once you mark these out, then you can start to look for structure shift. So you see right here, we had this high, then we had this lowest low before a violation of this high right here for a new higher high. So this is the valid structure. And you can even, if you want to, look in and maybe do this right here, and also maybe count this as also a somewhat valid market structure break. Looking at that area as well. But either way, you have your points of interest for watching for a possible reversal. So now that you have all these things in mind, these 3 to 4 questions in mind, then you can start positioning yourself for trades. So you see liquidity was taken. We had a very strong reaction off of this liquidity sweep. We had just a wick. This is on a 5-minute chart, so you could tell there was a strong reaction. Broke market structure. Still left these lows. These lows are still left here. And now you have even more lows because people are thinking they're getting in a good price to go long. They still think they're going to go long. And price came up, retested, could not get back into this wick right here. So you could tell that there was valid orders. We can drop on a lower time frame and look at this as well. So you can see these are valid orders right here. Price could not make it into it. And eventually it broke down and took out these lows. So I hope this concept was somewhat easy to understand. It's definitely helped me in my trading to approach and realize what's going on with the market. Liquidity is always king. Wherever it's resting it's there for a reason. It's not going to just be left there it's not just going to be left there to just by accident. Things are left there for a reason, because the biggest issue that market makers have is they have too much money. And when they have too much money, the issue is it's very hard to get your orders just filled right away. So to get your orders filled, you need to build them up, or you need to have a ton of volume come in. And that's where we have these certain structures that are built. We have liquidity left. We have equal highs and lows. We have untapped lows. It's left there for a reason. It's left there to be swept later on. It's left there so that you can hit people stop losses and switch out to buy positions or sell positions. Volume and liquidity is what's needed to make the market makers money. So paying attention to these will give you the breadcrumbs of what's going on with the market. What are they intending to do right now? And asking those questions and keeping in mind what their issue is will really understand how to position yourself and be in line with them, because most of the time we can't outtake them. This isn't AMC or GameStop. This is just a typical market, and you need to be on the side of the winners, and the market makers are definitely the winners in these scenarios. So hopefully this helped. Let me know if you have any questions. Definitely has helped me. I'm not 100% perfect at this, but I think that it will really give a good understanding, and it's definitely helping me from when I started kind of wrapping my head around these simple questions, and hopefully it can help you guys as well. So I'm also going to flip back because I know it just looks like it's just, rear end trading, but I actually did take this position. I was talking about it on my server, or on the server I'm on Discord, and then also as well, I do have like clips of me. I already kind of recorded this video, but I didn't really like how I worded it. I wanted to be a little bit more methodical with it. So I'll probably just flash back to me, before this crash, just saying I think that there's going to be a sweep of all these lows. So I'm not just rear end trading. So when I see this, I think that we are going to move down and we are going to violate all these lows. And the reason being, you can see right now, it's it's obviously reacting pretty strongly to the downside. When I look at these, and we were actually, let's say that the market makers actually wanted to move up. They wanted to actually go to $4,000 or whatever the case is. If they want to do this, don't you think that they would take this liquidity on the way up? Don't you think that they would have grabbed that on the second round, grabbed that on the second round, grabbed this area right here on the second round, sweeping both of these? And when I don't see that, it makes me assume that they're leaving it there to sweep later on, to have strong momentum, as they are right now. You could see prices moving very strongly to the downside. So thank you guys for watching. Have a good day.